Friends, with this video we will show you some of the clips to help you understand online classes.
Today we will be discussing a problem on Cashbook.
Okay.
So this is the transactions for the month of January, and from these transactions we have to prepare Cashbook for the month of January. So on 1st January there is a balance of cash in hand rupees 10,000. On 5th January purchase goods for rupees 5,000. On 10th January sold goods for rupees 5,000. On 20th January received interest rupees 1,000. On 25th January received from Rahul rupees 7,000, and 28th January paid to Raj rupees 5,000. Now this is the format of Cashbook. It will have 8 columns. First column will be date column, next particulars, then ledger folio, then amount column, again date column, particulars column, ledger folio and amount column. And the left hand side will be debit side and the right hand side will be credit side. As cash is a real account, the rule will be debit what comes in and credit what goes out. If cash is coming, it should be debited. If cash is going out, it should be credited. Now in our first transaction there is a balance of cash in hand rupees 10,000. So this is the opening balance. Opening balance of cash will come in the debit side and it will be written as to balance BD. So opening balance will come in the debit side as balance BD rupees 10,000. Okay. Next, our next transaction on 5th January purchase goods for cash rupees 5,000. As we are purchasing goods, so cash is coming in or going out?
Cash is going out.
Cash is going out. So when cash will go out, it should be credited. So on January 5th, by purchases account rupees 5,000. Okay. Next transaction on 10th January sold goods for rupees 5,000. As there is sale of goods, cash is coming in. So when cash will come in, it should be debited. So on January 10th, to sales account rupees 5,000. Okay. Next, on January 20th, received interest rupees 1,000. So we are receiving cash. Then it should be
cash on the debit side.
Debit side. So to interest account rupees 1,000. Okay. Now next transaction. On 25th January received from Rahul rupees 7,000. So we are receiving from Rahul, it means cash is coming in. So it should be again debited to Rahul's account rupees 7,000. Okay. Now next transaction on 28th January paid to Raj rupees 5,000. So we are paying to Raj. It means cash is going out. So when cash will go out, it should be credited. So on January 28th, by Raj's account rupees 5,000. Okay. Now this is our complete cash book. So as per our question, now these are the transactions for the month of January. Now we have seen the total of debit side is 23,000, whereas the total of credit side is 10,000. So cash book is prepared to find out the closing balance at the end of month. So how to find out the closing balance? From debit total we have to deduct our credit total. Okay. So now in our debit the balance BD is 10,000, then plus next 5,000 plus 1,000 plus 7,000. So the total is coming 23,000. Now from 23,000 we have to deduct our credit transactions. So our
Yeah.
first credit transaction is of amount 5,000. So from
5,000.
23,000 we will deduct 5,000.
5,000. Okay.
So it comes to 18,000. Then again there is a transaction of rupees 5,000. So again we have to deduct
Okay.
5,000.
Okay.
So it is coming 13,000.
13,000.
Means
13,000.
the balance in hand is rupees 13,000. As this is the closing balance, it should be written as by balance CD. So we are
Right.
writing it as by balance
By
CD,
balance sheet.
closing
Right.
balance at the end of the month.
Month.
Okay, so this is what our cash book.